Hello, welcome to European Open Briefing for Tuesday, July the 17th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. The dollar is more or less flat this morning. There's some caution ahead of Jerome Powell, as the Fed chair. He's going to be giving his first congressional testimony later today, where his views on the rising trade risks will be particularly watched. The pound is firmer after UK Parliament narrowly passed the customs bill yesterday, but that came only after Theresa May accepted amendments put forward by Brexiteers. This angered the Remainers in the government, and it also puts into doubt whether the now not so soft proposals of a customs arrangement, whether or not they're going to be approved by the EU. We can see though that sterling is marginally higher this morning, around 1.3240. The euro is also slightly up against the dollar, currently around 1.1725. But the biggest mover this morning is the New Zealand dollar. We had inflation data out of New Zealand earlier today. We saw the Kiwi jumping higher. It's currently up by around 0.8% against the greenback, around 0.6830. We also had the meeting minutes of from the RBA for the July meeting. The Aussie was also up on those minutes, which were fairly upbeat. The Aussie currently slightly up around 0.7424 at the moment. Oil prices were earlier extending yesterday's declines. They are now moving marginally higher. WTI is around just above the $68 a barrel level. We're seeing increased supply coming into the market as supply disruptions ease, and particularly from Libya and Saudi Arabia increases its output. So all of that is weighing on oil prices. But at the moment, we do seem to be having some pairing of those losses. In equities, most Asian indices are closed in the red, and it's mostly negative start in Europe as well. They're being weighed by a drop in energy stocks, trade tensions, as well as in particular we had the IMF sounding worried about the potential impact from trade tensions on growth yesterday. And some disappointing earnings out of the US. If you look at today's main moves, we can see top of the table there, Kiwi, dollar, and at the bottom, it's the dollar index. The dollar is broadly weaker this morning. Against the yen, though, the dollar is more or less flat. It's consolidating following those 6 month highs from last Friday. It's currently trading around 112.30. We had a bit of a lift yesterday coming from solid US retail sales growth for June, which pointed to strong growth in the second quarter. But later we had bit of a slide in tech stocks on Wall Street, so that did weigh on the greenback a little bit. Today, though, the focus will be on Jerome Powell's semi-annual testimony before Congress, where although we had that speech already being published, it's going to be interesting to see what answer he will give to questions from US senators. Let's now look at the Australian dollar. Yesterday, we saw the Aussie coming under pressure from soft data out of China, where GDP growth slowed in the second quarter, and we also saw industrial output and investment growth slowing sharply as well for the month of June. But this morning, the Aussie has jumped to around 0.7430 following the RBA's minutes of the July policy meeting. The RBA is confident that growth will average just about 3% for the year, and is also confident about the labor market as well. And it said that the next move in rates will more likely to be up than down. But for the near term, though, they saw no strong case. Nevertheless, the Aussie is benefiting from those minutes this morning, and the Kiwi is the best performer. We can see it soared to around 0.6840 against the US dollar. Although inflation did miss estimates, quarterly inflation for the second quarter came in at 1.5%. That was below forecast of 1.6%. It was, though, up from the prior quarter of 1.1%. So 1% is the bottom of the RBNZ's inflation target range. And we also saw that the RBNZ's one of the measures of underlying inflation rose to 1.7%. That's a 7-year high. So that's the main reason why we're seeing that surge in the Kiwi this morning, as it pretty much rules out a rate cut. Although a rate hike is far away as well, it nevertheless means that the markets are now pricing out a possibility of a rate cut, and so that is definitely having an impact on the currency markets. A quick look at today's economic calendar. The main data coming up in the European session will be UK jobs numbers, and later on in the US session we're going to have US industrial output, as well as the dairy auction, which will be another factor for the Kiwi to watch, plus Fed Chair's testimony at 14 hours GMT. That's it from me. Thank you very much for watching, and have a great day.